Alright, welcome back to Archi Lens. Today, we're gonna talk about why some will not survive this cycle. The people making most money in this market are not the fastest investors anymore. And that fact changes everything, because the Dubai real estate market is actually starting to separate the strong portfolios from the weak ones. When the market becomes uncertain, not everyone is losing. Some people actually gain advantage during this period, because when conditions tighten, the market stops rewarding speed and start rewarding strength and foundations. And this is exactly where most investors misunderstand it and eventually get trapped, because the strategy that works during expansion can become very dangerous when liquidity slows down. We need to mention here the market didn't suddenly change, but the environment did. As we saw in the last couple of years, when the market's strong, everyone looks smart. Price rising, liquidity flows, exits are easy, and speed become profitable. But during uncertain markets, the game become different, and the market start testing how your portfolio was actually built. And the first group that struggles are actually the investors that exposed to time. I mean by that the short-term holders, the flippers, traders, and especially those using high debt with short exit in mind, because real estate is a long-term asset. But some people are still treating it like a short-term trade. And in this environment, time starts to work against them, because holding cost rises, liquidity slows, and also buyer decision cycles slows down. And of course, exiting become harder. We need to highlight on the fact that the problem is not always the asset, but sometimes the problem is the investor's timeline. And this is where the pressure changes the behavior. Because the more financially stretched you are, of course, the less flexibility you have, which means the market here start making decisions for you. Therefore, pressure does not destroy portfolios, but it actually reveals how they were built. And of course, weak structures break first. On the other hand, the strong structures gain leverage. But on the other side of the market, there is a completely different group. They are the buyers with liquidity, long-term holders. People think in years, not in months, and stronger capital that moves while others hesitate. And this group behave like this because they are not under pressure and they don't need to act. This group can wait, can observe, they can also negotiate and choose carefully and selectively. And this is where the real advantage comes from. In a strong market, yes, speed wins. But on the other hand, in an uncertain market, patience wins. Here's the question: what you actually should do if you are already exposed? You need to stop looking for a quick exit and start focusing on income. Because if the property can't sustain itself, then time stops becoming your enemy. Therefore, the moment the asset can cover itself, here exactly where you regain control, and you will stop needing the market every single month. Therefore, you don't need a buyer. Here, you need a tenant. But on the other side, if you are a buyer and you have liquidity, don't just buy because prices drop. Why? Because cheap doesn't always mean value. And in the market like this, you're not buying discounts, but you are buying quality. So you need to stop thinking about only discount and start focusing on quality. And what I mean by quality is the asset that's difficult to replace. Best location, best layout, and of course the best entry price in the community. And the asset that people still want 10 years from now. And the biggest mistake that investor can make is using the wrong strategy for the wrong environment. In other words, what works during expansion does not work when liquidity slows down, and you cannot flip your way out of pressure. But here you have to survive through it. And it's a fact that at the end of the day, the market does not care about your plans, but the market will show and test how your portfolio was already built. So if your portfolio depends on speed, such as quick flips and short-term exits, this environment during the uncertain market will expose it. But on the other hand, if your portfolio was built to hold, and your portfolio was built around income and built around long-term desirability, this is exactly where your advantage begins. And the market is not disappearing. But unfortunately, not every portfolio will survive it, because uncertain markets do not reward hype, but they reward the structure with solid foundation. And the investors who survive this cycle, they will be the one positioned and leveraged for the next cycle. And through Archi Lens, we don't chase the market. In fact, we decode the structure and position within it.